Thanks so much for tuning into this very special conversation on the eve of Diwali and on the day of Dhanteras. And on the day of Dhanteras, how can we not have a conversation with a man whose columns have helped all our readers through the last few years protect Dhan and build upon their Dhan? Dr. C.K. Narayan Johnson. Dr. Narayan, thank you so much for taking the time out. And I'm wishing you and
Thank
family
you.
a very happy Diwali.
Same to all you and all the viewers of this program.
Thank you so much, Dr. Narayan. So I'll start off with the most obvious question. From here to the next Samvat, though I know you make the annual prediction at the end of the year, which we will do in December as well. But maybe here on to the next Samvat or here on for the next 3 months, 2 months, as the case may be. How do you see the markets and what are the factors that will impact the markets the most? Maybe fund flows, maybe something else.
I think the crux of the matter is really the fund flow, isn't it? Because if you look at the situation now, there is a lot of uncertainties about, particularly emerging out of the US, interest rates, yields, and all that. And the FIs have been selling. It's all there, right? Series of things are there, but the market is where it is, and that's a key. That's a key element finally. And why is the market still there despite the fact that the FIs have been on a selling spree? It's because the DIs, the domestic mutual funds, have been on a buying spree, and they have been more than a match. And if you look at Samvat 2079, which is just ending, they have bought about $22 billion worth of goods, whereas the selling by the FIs have been about 17 billion. So this is something of a big departure in the sense that the DIs have been bigger, larger buyers in a single year compared to what the FIs have sold. And I think that explains why the market is where it is, that it has not suffered really much of a reaction. And if you look at the chart where we are looking at, let's say, the flows, right? And what I've shown on those charts there is two sets of charts. One is the consistent increase in the buying by the domestic mutual funds, which has particularly been so over the last about 7-8 years, had been very consistent. Brief dip in between, but then again charged up to new highs. And in comparison, during that same period, the FIs have been somewhat, let's say, hesitant. They have been selling, they have been buying a little and all that. The net impact has been that their buying graph has not really had an upside trajectory. And one of the reasons that we can ascribe to this, of course, I'm not saying anything new that people don't know, but I think when we see it visually on the charts, it makes for a lot more impact. And I have added in this chart the increase in the number of demat accounts and the total number of newer people who have actually come in. And we can see that there is a huge increase in the number of people who have come into the markets, have brought in the money. This is all by way of SIPs. And for example, at the lower end, I put a strip saying that in FY22, you had about 10,000 odd crore flow per month, which increased to 13,000 crores in FY23. And in FY24 now, we are going towards more of an average of 16,000 crores. And for October, we had the figure nearly at 16,928 crores. Now, if that's the kind of fund flow which is coming in and going towards the domestic mutual funds, this is more than good enough to take care of any amount of foreign fund flow. So I think it just comes down to this basic point that we are having a hell of a lot of flow. Now, this is, should I continue or do you want to?
No, I have a question. Dr. Narayan, I have a question. And the question is that if indeed the flows are looking strong, and which they are, at least the monthly SIP flows are, the other aspect in those monthly SIP flows is the kind of persistence towards the small cap and the mid cap arena. Even this month's numbers that came out yesterday, the total number in small cap and mid cap put together is circa 7,000 crores. Those numbers haven't really dipped too much in the recent past. So, and there are a lot of new sectors which have gotten formed which are mid cap in nature. I mean, railways, EMS, to a certain extent defense as well. A lot of mid cap plays and presence out there. So how is that side of the market looking? Because this year, calendar year, mid caps have outdone the large caps by a country mile. Can that continue?
I feel it will most certainly continue because of a variety of reasons. One is the extreme focus of buying from the retail, which largely goes into the mid caps, the direct purchases, etc. Now, if you look at it, India is the most attractive market among the set of global markets, but it is also the most expensive market. Now, that is actually creating a problem for incremental flows from the FIs. And FIs typically target the large caps. And since Indian market is deemed to be expensive, they are not able to really bring in money, and they have issues at their own backyard. So the money is actually flowing out. Now contrast this with the fact that there is a hell of a lot of money flowing in from domestic funds, and that is continuing to keep the prices up. So India is not becoming cheaper. So this flow of money, and this money has to find its way somewhere. Now, if you look at the yields or the returns that the large caps have given over the last 6 months to 12 months, it's been quite limited. In complete contrast to this, the returns from small cap, mid cap, and even micro cap has been tremendous. So all the money is going there, and even from the domestic mutual funds, to find their alpha, they need to go towards this, small, medium, and micro cap leaders. There are lots of leaders within that sectors also. Even though they may be a market leader or a segment leader, they are still either a small cap or a mid cap. So I think this fund flow towards the mid cap, small cap is going to continue. So two fallouts of that. No big dips are ruled. I mean, big dips are ruled out because the FIs want to buy into the Indian market because, like I said, it's the most attractive market. Growth is there, GDP growth is there. In this thing, Nifty, the earnings growth is there. The results are doing well. Growth is here. So they would want to put money in, but they are finding the valuation a little steep. So they would wait to buy during any dip that may emerge. So big dips are ruled out. Second is lots of money is coming in, and this money is trying to seek some alpha, and that alpha has to be found in mid cap, small cap, and micro cap. So that entire area is still going to flourish.
So if that is the case, Dr. Narayan, with some idea of the time horizon that you're looking at for your bets, for your trades and investments, because your weekly column lays out what you expect to happen in a week, so that our readers and our get a sense of. Right now, are you talking for the next 2-3 months, or are you talking slightly longer? And with that in mind, what are the themes that you're looking for, either on the short side or on the long side?
Well, I think the weekly column, as you said, covers only the immediate outlook, right? So, but we are talking somewhat 2080. So,
Okay.
Speaking a little longer term in that, and with the one proviso we have discussed already, which is fund flow. The second imponderable, which is there across the next year, let's say going into the next Diwali, is this election and the noise that it is going to really create, right? So that is going to be noise and nothing more than that. So you'll have volatility till about May, June. That is unavoidable, right? So you have all these newer people. The newer people do not have a history. They just know their recent experiences, and their recent experiences have not been too bad because they came in 10 crore new retail accounts, and then they all had a great run. Then they had a big fall into this year. We saw that big decline in June. So retail sold out, but then they came back, with kind of redouble vigor. All negatives are known, but the market is still up, and small cap, mid cap indices at new highs. So I would think that what is really happening here is post-COVID, all earlier correlations are changed. Now people look at all this gains in mid caps, small caps, and even micro caps, and everybody is eager to announce a bubble. I don't think it's going to be a bubble. It is far away from being a bubble, mainly because the newer breed of people who are here are younger people, intelligent people. They are well-funded new
Sure.
investors, people who, all of them have come in. The rise is not enough to create any kind of euphoria. We are still in the,
Sure. Sure.
the throes of a bull market, which should run about a year at least,
Okay. So
if not
Teji.
more.
So there is Teji ka mahol. Now within that Teji ka mahol,
Yep.
what to bet on, where to bet on, how to think about it. Dr. Narayan, before we wrap up, what is it that you're looking at?
Well, I think, one of the charts that I would, which I had sent you was one which compares the BSE Sensex with the other volatility index and the small cap and mid cap and all that. Now, if the Sensex is representing the large cap and that is underperforming these other sectors, which is what I've shown in that particular chart, and then it is very evident that market is moving away from large caps into the small and mid caps. This is something as a point I've already made. Then the other chart that I sent you was one on realty sector. I think if you look at that or load that chart up on the screen, then you will see that realty sector actually had its peak way back in 2007-8. And from there till about 2020, it was under a reaction and consolidation. So that's about 10 to 13 years of consolidation or a reaction. And from the bottoms at 2020, this like all other sectors, this has also made a comeback. But the kind of outperformance you're seeing in the realty sector, it's almost like a spring which has been coiled up has been released. Now, some sort of revenge buying, this that people have talked about. But in terms of what lies as the potential, I think we are going to have reality as a kind of 5 to 10 year bull market. So this is not just for the year. I'm calling for a 5 to 10 year bull market in reality. I think we are just starting to see things, and that is also an area which is changing dramatically, and it will continue to outperform the sector. Today, we have it, kind of populated with a lot of small builders and small players and large players. When the sector is trending, it is the large players who will really benefit. The small players are largely going to be aggregators of land who will supply to all these people. So I think if you look at the realty and then look at the leaders, Oberoi Realty, DLF, and Godrej Property, just to name some 2 or 3 of them, I think that whole pack will do very, very well. The opportunities there, they're all diversifying into some EPC work and all that. So I see realty sector as the big play ahead for the next 5 to 10 years.
Okay, Dr. Narayan, I'm out of time completely, but I would love to know, are you playing real estate only through real estate stocks or also through the ancillaries? Any thoughts there, any names there?
See, that's the beauty of the real estate sector, because it's got so many ancillary stuff which also you can play. And there are many leader stocks, many good stocks, building product stocks, and you got all the other ancillary tile. I mean, you name it, there's so many of them. Look at all the pipe stocks, and I think there is a whole lot of stocks to play it, and there are many good stocks also, leaders from their own respective areas. So I think it's not just the builders whom we are going to target, that is one set, but all the other ancillaries also.
The big call from Dr. C.K. Narayan, real estate, not just for today, not just for this year, but presumably for the next 5 to 10 years. Remember, charts may change and things may change, but as things stand, they look this way. Dr. Narayan, take a moment to thank you for your splendid columns all through the weeks that you send us and keep us educated on what the charts are saying. And to you and yours, a very happy Diwali and a prosperous New Year once again.
Thank you very much, and wish everybody a happy Diwali from my side also.
Thank you so much. And viewers, thanks for tuning in to this very special conversation.